Hey everyone, and welcome back for another deep dive.
Excited to be here.
Today we're tackling a pretty big question. How do U.S. elections affect the stock and crypto markets?
Yeah, it's definitely something a lot of people are wondering about.
Especially with everything going on.
Right.
We've got some interesting sources for this deep dive: Citizens Bank Investing News Network and BNN Bloomberg.
All great sources.
Each one kind of has its own take on how elections and markets are connected.
Yeah, that's what makes it so interesting, right?
For sure.
Yeah.
So think of this deep dive like your guide to understanding how the market might react during election season.
A roadmap to help you make smart decisions and avoid those knee-jerk reactions that can sometimes hurt your investments.
Exactly. We want to help you stay focused on your long-term financial goals regardless of who wins the election.
Because in the end, that's what really matters.
Okay, so let's jump right in. Citizens Bank did some research and found something that I found pretty surprising. The S&P 500's average yearly return has been pretty much the same in both election and non-election years, going all the way back to 1927.
Yeah, that's one of those stats that really makes you think.
Right. You always hear these stories about how elections shake up the market.
But it turns out the market's a little more resilient than we give it credit for.
I guess so. It's driven by a lot more than just who's in the White House.
Exactly. Things like interest rates, global events, corporate earnings, those are the big players.
Okay, so elections might not be the market-crashing events that we sometimes imagine,
Right.
but I'm still curious about those short-term fluctuations that happen around election time.
Sure.
Citizens Bank mentioned increased volatility in the months before an election because of all the uncertainty.
Yeah, there's definitely a heightened sense of anticipation during those times.
So should we just brace ourselves for a wild ride?
Well, volatility is a part of the market, whether it's an election year or not.
True.
What's important is to remember that things tend to settle down pretty quickly after the election.
Okay, so it's more like a temporary blip.
Yeah, you could say that. Remember back in 2016 when the market initially dipped after the unexpected outcome?
Yeah, I remember that.
But then it quickly rebounded and went on to experience a period of sustained growth.
So it's like a knee-jerk reaction followed by a more reasoned response once the dust settles.
Exactly. And that's why it's so crucial for investors to not get swept up in those short-term swings.
Right, because those headlines can be really attention-grabbing.
Oh yeah, they know how to play on our emotions.
So should we just ignore all the election news and focus on our long-term goals?
It's not about ignoring the news. It's about putting it into perspective.
Okay, making sure it doesn't derail our long-term strategy.
Right. Your investment strategy should be built on a foundation that's much stronger than the outcome of any single election.
That makes sense.
History has shown that regardless of who's in the White House, the market tends to find its footing and continue its upward trajectory over the long haul.
Okay, that definitely makes me feel a bit more at ease. But I'm still curious about something else that Citizens Bank mentioned.
What's that?
They said that different sectors tend to perform better under specific political parties. Like defense and industrial stocks might do well under Republicans, while healthcare often thrives under Democrats.
Yeah, that's a pattern that analysts have observed over time.
Is there any truth to that?
Well, it makes sense when you think about the policy implications.
Oh, so.
Take defense, for example. If a Republican administration prioritizes increased defense spending, companies in that sector might see a boost in their stock prices.
Okay, because they're getting more government contracts.
Exactly. Or on the flip side, if a Democratic administration focuses on healthcare reform, that could create opportunities for growth within the healthcare industry.
So it's all about aligning your investments with the potential policy shifts.
In a way, yes. But it's not about trying to game the system or pick winners and losers based on who you think is going to win.
Right. It's more about understanding how different policies might impact certain sectors.
Exactly.
Yeah.
And it's a good opportunity to take a look at your own portfolio and ask yourself some questions.
Like what?
Well, are you comfortable with the level of exposure you have to specific sectors?
That's a good one.
How might your holdings be affected by potential policy changes?
Right, because those ripple effects can be significant.
They can. This is a great time to reevaluate your strategy and make adjustments if needed.
Makes sense. Now, I remember Citizens Bank also said that it's not just about the presidential race.
Oh, yeah.
They mentioned congressional elections playing a role, too.
Absolutely. The composition of Congress can have a big impact on market performance.
Really?
Yeah. You see, when Congress is either unified under the president's party or divided, it creates a more predictable legislative landscape.
And markets like predictability.
Exactly. But when the opposition party controls both the House and the Senate,
It can lead to gridlock.
Right. And that means more uncertainty, which the market doesn't like.
So we need to keep an eye on those congressional races, too.
Definitely.
Yeah.
They might not get as much media attention as the presidential race,
True.
but they can have a real impact on your investments.
Okay, I'm adding that to my list of things to watch.
Yeah,
Now let's switch gears and talk about crypto.
that's good.
Because, let's be real, it's become a major force in the world of finance.
It definitely has.
Investing News Network has a really interesting analysis of how the 2024 election is shaking things up in the crypto space.
Yeah, they've done some great reporting on that.
They point out the growing influence of the crypto industry on U.S. elections.
It's pretty remarkable how quickly that's happened.
Right.
And it's not just about individual investors buying Bitcoin anymore.
Yeah.
It's about the industry as a whole flexing its political muscle.
Exactly. And one of the ways they're doing that is through super PACs.
Those political action committees that can raise unlimited sums of money from donors and spend it to influence elections.
It's a lot of money being funneled into supporting candidates who are seen as crypto-friendly.
Millions of dollars.
Wow. So it's not just about who's buying Bitcoin anymore. It's about who's backing the politicians who could shape the future of crypto regulation.
Exactly. And that brings us to the complex landscape of crypto regulation, which can be a bit of a minefield for investors.
Yeah. It's a whole new world.
Investing News Network did a good job of explaining the contrasting approaches of two key regulatory bodies, the SEC and the CFTC.
Okay, I need a quick refresher on those.
Okay.
The SEC is the Securities and Exchange Commission.
Right.
They oversee the stock market. And the CFTC is the Commodity Futures Trading Commission.
Which deals with commodities like gold and oil.
But where does crypto fit into all of this?
That's the million-dollar question.
Right.
The SEC, under its current chair, Gary Gensler, has taken a tougher stance on crypto, arguing that many cryptocurrencies should be classified as securities.
Which would mean they'd be subject to the same regulations as stocks and bonds.
Exactly. And that could be seen as limiting innovation in the crypto space.
But the CFTC views some cryptocurrencies like Bitcoin and Ethereum as commodities.
Which would place them under their more flexible regulatory framework.
So it's almost like a jurisdictional battle.
Yeah, you could say that. And it creates a lot of uncertainty for investors,
I can imagine.
trying to navigate a financial market where the rules of the game are constantly shifting.
It's challenging, to say the least. So for someone like me who's just starting to dip their toes into the world of crypto, this all feels a bit overwhelming.
I understand. It's a
Yeah.
lot to take in.
It's like a regulatory tug of war, and I'm not sure who to root for.
It's not really about rooting for one side or the other.
Okay.
It's about understanding that the regulatory landscape is evolving, and there are a lot of moving parts.
That's a good way to put it. So how can I stay ahead of the curve?
Well, for starters, you got to stay informed about the latest developments and consider how these regulatory battles might impact your crypto investments.
Okay, knowledge is power.
Exactly. Now, are you ready to dive into the candidates themselves and see where they stand on crypto?
Let's do it. Investing News Network and BNN Bloomberg have been tracking their evolving stances, and it seems like both Trump and Harris have had to adapt their positions as the crypto industry has grown in influence.
Yeah, they've definitely had to adjust their thinking as crypto has become more mainstream.
Okay, I'm really curious to hear what you've uncovered.
It's been quite a ride, to say the least. Trump, for example, initially expressed skepticism about Bitcoin.
Oh, yeah, I remember that.
He even called it a scam at one point.
But then he launched his own collection of NFTs.
Right, those Trump digital trading cards?
Yeah, they were everywhere for a while.
He was also accepting campaign donations in cryptocurrency at some point.
It seems like his approach has been all over the map.
He's definitely been willing to experiment and adapt as the crypto landscape has shifted.
So what's his stance now?
He's been critical of the Biden administration's handling of crypto regulation,
Saying what?
suggesting that he would take a more hands-off approach if elected.
So is he basically saying, let crypto flourish and let the market decide?
It's not quite that simple. While he's expressed support for innovation in the crypto space, he hasn't laid out a detailed regulatory plan.
So it's hard to say what he would actually do if he's elected.
Exactly. Okay, what about Kamala Harris? What's her take on crypto?
I'm all ears.
Harris seems to be taking a more cautious and measured approach, emphasizing both innovation and consumer protection.
Which makes sense given her background as a prosecutor.
Right. She's always been focused on protecting consumers from fraud and abuse.
So how does she balance that with the need to foster innovation in such a dynamic industry?
It's a delicate balancing act.
Mm.
According to Investing News Network, Harris has ties to the tech industry going back to her time as Attorney General in California.
Oh, interesting.
So she's not a stranger to the world of innovation. She understands the need to create a regulatory environment that allows companies to flourish.
But she's also expressed concerns about the potential for crypto to be used for illicit activities.
Right, things like money laundering and terrorism financing.
It seems like she's trying to find that sweet spot between encouraging growth and preventing abuse.
Exactly. And that's why her stance on crypto is so closely watched.
Mm.
She's seen as someone who could potentially bridge the gap between the crypto enthusiasts who want minimal regulation and those who are more cautious about the potential risks.
Okay, so for someone like me who's trying to figure out where to put my money, this whole crypto thing feels like a bit of a gamble.
I understand. It can be daunting.
How do I even begin to assess the potential impact of these different candidates on my crypto investments?
Well, the key is to look beyond the sound bites and really dig into the specifics of their proposed policies.
What are their stances on key issues like stablecoin regulation, taxation of crypto gains, and the role of the SEC versus the CFTC?
Exactly. Once you have a clear understanding of their positions, you can start to assess how those positions align with your own investment philosophy and risk tolerance.
Okay, that's helpful advice. So it's not just about whether a candidate is pro-crypto or anti-crypto. It's about understanding the nuances of their approach and how those nuances might translate into actual policies that affect the market.
Precisely.
Hmm.
And remember, the crypto landscape is still relatively young and evolving rapidly.
It's moving at the speed of light.
So it's important to stay flexible and adapt your investment strategy as needed.
Okay, I'm definitely taking notes. Well, this has certainly given me a lot to think about.
Good. I'm glad.
Before we wrap up this part of our deep dive, I want to circle back to a point that Citizens Bank made that really resonated with me. They warned against emotional investing, especially during elections.
Yeah, that's a big one. It's so easy to get caught up in the hype and make impulsive decisions based on who you want to win or how the market seems to be reacting to certain campaign promises.
Exactly. It's like our emotions take over and we forget about our long-term goals.
It's human nature to be swayed by emotions, especially during something as charged as a presidential election.
Right.
But when it comes to your investments, it's crucial to stay grounded in data logic and a well-defined strategy.
Easier said than done, right?
It can be. But it's so important to remember that your financial decisions should be based on facts, not feelings.
Okay, I'm going to try to keep that in mind.
And that's why it's so helpful to have a trusted financial advisor who can provide objective guidance and help you stay on track with your goals, even when the market feels like it's on a roller coaster.
That's a great point. Sometimes we need that outside perspective to keep us grounded.
Absolutely. They can help you filter out the noise and focus on what really matters, making smart, informed decisions that align with your long-term financial aspirations.
I love that. Making smart, informed decisions. That's what it's all about.
It is.
So before we move on to part 2 of our deep dive, let's take a moment to recap what we've learned so far.
Sounds good.
We started by debunking the myth that elections always lead to market chaos.
Right. The data actually tells a more nuanced story.
Exactly. We learned that while there might be some short-term volatility around elections, the overall market performance is typically driven by larger economic factors.
Like interest rates, global events, and corporate earnings.
Right. And we also talked about how different sectors might be affected by the policies of different administrations.
Like how defense might benefit under a Republican administration, while healthcare might thrive under a Democratic administration.
Exactly. And then we explored the growing influence of the crypto industry on U.S. elections.
Delving into the complex world of crypto regulation.
And the contrasting approaches of the SEC and the CFTC.
Right. Those two are always at odds.
It seems like it.
Mm.
And we examine the evolving stances of both Trump and Harris on crypto, emphasizing the importance of looking beyond the sound bites and really understanding the potential impact of their proposed policies on the market.
It's all about looking at the details.
And finally, we circle back to the crucial point of avoiding emotional investing.
One of the biggest pitfalls for investors.
Highlighting the need to stay grounded in data logic and a well-defined strategy, even amidst the excitement and uncertainty of an election year.
Because that's how you make sound financial decisions.
Exactly. So be sure to tune in for part 2, where we'll delve even deeper into the intricacies of how elections and the market are intertwined.
We'll be exploring some fascinating topics.
Like the role of super PACs in shaping the crypto regulatory landscape.
We'll also examine specific pieces of legislation making their way through Congress.
And explore how the U.S. dollar might be affected by the outcome of the election.
It's going to be a wild ride.
So buckle up and get ready for part 2 of our deep dive into the fascinating world of elections and the market.
See you there. Welcome back to our deep dive into elections and the market.
You know those crypto-backed super PACs we were talking about before the break?
Yeah.
It's amazing how much influence they've gained.
They've become a real force in politics.
Investing News Network mentioned that they've been targeting lawmakers who haven't always been supportive of crypto.
It's true. They're not just playing defense anymore.
Yeah.
They're actively trying to reshape the regulatory landscape.
To benefit the industry.
Exactly.
It's like they're playing a game of chess.
Strategically maneuvering their pieces.
And they have deep pockets, too.
Oh, yeah. Investing News Network reported that one super PAC spent millions on attack ads against a California representative who had raised concerns about consumer protection.
Wow. That's a lot of money.
They even tried to unseat a senator who chairs a powerful banking committee.
Because he was critical of crypto.
He had been, yeah. It's a bold move trying to influence who sits on those committees.
This is a prime example of how the crypto industry is becoming increasingly politicized.
It's not just about technology anymore.
Right. It's about lobbying, campaign contributions, shaping public policy.
And for investors, it's a reminder that politics plays a huge role in the market.
Okay, so let's talk more about the current state of crypto regulation in the U.S.
All right.
Investing News Network pointed out that it's kind of a patchwork right now.
It is. There are different agencies taking different approaches.
It's like a tug of war between the SEC and the CFTC.
Exactly. The SEC, under Chair Gary Gensler, wants to classify many cryptocurrencies as securities.
Which would put them under stricter oversight.
Right.
And the CFTC sees some cryptocurrencies as commodities.
Like Bitcoin and Ethereum.
So which is it?
That's the big question.
Hmm.
And it's creating a lot of uncertainty for investors.
I can imagine.
Investing News Network mentions several bills that are making their way through Congress.
Oh, really?
And these bills could completely reshape the regulatory landscape.
Okay, so which ones should we be paying attention to?
One of the most important is the Financial Innovation and Technology for the 21st Century Act.
That's a mouthful.
It's usually called FIT 21 for short.
Okay, FI201.
It aims to give the CFTC more authority over crypto.
So if it passes, it would be a win for the crypto industry.
Potentially,
Yes.
but there's a twist.
What's that?
President Biden has expressed opposition to the bill.
Really?
He's even threatened to veto it.
Yeah.
But here's the interesting part. A number of Democratic senators actually voted in favor of the bill.
That's surprising.
It suggests that there might be some growing support within the Democratic Party for clearer crypto regulations.
Even if those regulations differ from the SEC's approach.
Exactly. So FIT 21 is definitely one to watch.
Okay, what else is on the horizon?
There's also the Responsible Financial Innovation Act.
What's that one about?
It aims to strike a balance between fostering innovation and protecting consumers.
Sounds like a more moderate approach.
It does. And it specifically addresses concerns about money laundering.
Which is a big issue in the crypto world.
It is.
And then there's the Digital Asset Anti-Money Laundering Act.
Right. That one focuses specifically on preventing money laundering and terrorism financing.
Is it getting much support?
It actually has broad support from both sides of the aisle.
Even from those who have been critical of crypto in the past?
Yes. Even Senator Elizabeth Warren has voiced support for it.
So it seems like there's a growing consensus that this is an issue that needs to be addressed,
It does.
regardless of your overall stance on crypto.
Exactly.
Yeah,
So what does all this mean for investors?
good question.
First and foremost, it highlights the importance of staying informed.
Because things are changing so quickly.
Exactly. What's true today might not be true tomorrow.
It's like trying to hit a moving target.
In a way, yes.
Okay, so we need to stay informed, but what else?
It also underscores the risks of investing in crypto.
It's not for the faint of heart.
It's not.
Mm-hmm.
But if you're willing to do your homework, understand the risks, and stay up to date on the latest developments,
It can be rewarding.
it can.
Okay, so let's talk about the candidates themselves and their stances on crypto.
Right.
Investing News Network and BNN Bloomberg have been following their evolving positions.
They have, and it's been interesting to see how they've adapted as the crypto industry has gained more prominence.
Trump's journey has been particularly fascinating.
It has.
He went from calling Bitcoin a scam to launching his own NFT collection.
And accepting campaign donations in cryptocurrency.
Yeah, it's been quite a turnaround.
He's also criticized the Biden administration's approach to crypto regulation,
Saying what?
suggesting that he would take a more hands-off approach if elected.
So is he basically saying, let crypto flourish and let the market decide?
It's hard to say for sure. He hasn't laid out a detailed regulatory plan.
Okay, so what about Kamala Harris?
Harris seems to be taking a more cautious and measured approach.
emphasizing both innovation and consumer protection.
Right. She's spoken about the need for clear rules and regulations for digital assets.
Which makes sense given her background.
It does. Investing News Network also pointed out that she has ties to the tech industry, going back to her time as Attorney General in California.
Oh, interesting.
So she understands the need for innovation,
But she's also concerned about the potential for crypto to be used for illicit activities.
like money laundering and terrorism financing.
So she's trying to find that balance between encouraging growth and preventing abuse.
Exactly. And that's why her stance is so closely watched.
Okay, so how can investors assess the potential impact of these different candidates?
The key is to look beyond the sound bites and dig into the specifics of their proposed policies.
Like their stances on stablecoin regulation, taxation of crypto gains.
Exactly. Once you understand their positions, you can assess how they align with your own investment philosophy.
Okay, so it's not just about whether they're pro-crypto or anti-crypto.
Right. It's about understanding the nuances of their approach.
Okay, so we've covered a lot of ground on crypto.
We have.
But let's zoom out a bit and talk about the broader market.
All right.
BN and Bloomberg had a good piece on this. They pointed out that there's always some volatility leading up to a presidential election.
It's true. Markets don't like uncertainty, and elections introduce uncertainty.
So should we expect a roller coaster ride for the next few months?
Not necessarily.
Mm.
While some volatility is normal, historically, these election-related swings tend to be short-lived.
Okay, so it's more like a temporary blip.
You could say that once the election is over, investors typically shift their focus back to the fundamentals.
Things like economic growth and corporate earnings.
Exactly.
So the message here is don't panic.
Right. Stick to your long-term plan.
And ride out the waves.
If you have a well-defined investment strategy, there's no need to make drastic changes.
Makes sense. Now, are there any sectors that are particularly sensitive to election outcomes?
BNN Bloomberg highlighted the healthcare sector.
Oh, really?
It often underperforms in election years, regardless of which party wins.
Why is that?
Healthcare is always a hot-button issue in elections. Both parties campaign on promises to lower costs and expand access.
Which creates uncertainty for healthcare companies.
Exactly.
Yeah.
Investors try to anticipate how potential policy changes might affect their bottom line.
So if you're invested in healthcare, should you be worried?
Not necessarily. It's important to remember that campaign promises don't always translate into concrete policy changes.
Right.
Remember all that talk about repealing and replacing the Affordable Care Act?
Yeah.
Ultimately, those efforts fell short.
So don't make investment decisions based solely on what politicians are saying on the campaign trail.
Exactly. Do your research and make informed decisions.
Okay, now let's talk about taxes.
All right.
Both Trump and Harris have proposed changes to the tax code.
They have. And those changes could have significant implications for investors.
How so?
Well, Trump has hinted at further tax cuts, particularly for corporations.
To boost economic growth.
Exactly. And those tax cuts could potentially lead to higher corporate profits.
Which could drive stock prices higher.
Right. But there's also the potential for those tax cuts to lead to higher budget deficits.
Which could have negative consequences in the long run.
Yes, potentially leading to higher interest rates and slower growth.
Okay, so there are trade-offs to consider. What about Harris? What's her approach?
Harris has proposed tax increases on wealthy individuals and corporations.
To fund her social programs.
Exactly, like universal child care and expanded health care coverage.
So higher taxes on the wealthy to fund social programs? It's a classic progressive approach.
It is. And while those tax increases could generate revenue, they could also potentially stifle economic growth.
And discourage investment.
Right. So again, there are potential trade-offs to consider.
It sounds like it's important to weigh the potential benefits of each candidate's tax plan against the potential risks.
Exactly. And keep in mind that the actual tax policies that get implemented might differ from what the candidates are proposing.
Right. It's a complex process.
It is. It involves a lot of negotiation and compromise.
So it's not just about listening to what they're saying.
Right. It's about understanding how those proposals might be shaped and reshaped.
Okay, so taxes are a big one to watch. Are there any other key areas we should be paying attention to?
BN and Bloomberg also talked about the potential impact of the election on the U.S. dollar.
Oh, right. The dollar.
The strength of the dollar can have ripple effects throughout the global economy.
Affecting everything from trade to inflation.
Exactly. Some analysts believe that a Harris victory could lead to a weaker dollar.
Why is that?
Her policies might be perceived as less business-friendly than Trump's,
So a potential shift in global perceptions.
based on who wins the election.
But what does a weaker dollar actually mean for investors?
A weaker dollar can make U.S. exports more competitive.
Because they become cheaper for buyers in other countries.
Exactly. which can be good for U.S. companies that sell their products overseas,
But it can also lead to higher inflation.
because imported goods become more expensive.
Okay, so there's a trade-off there. What about if Trump wins?
A Trump victory might be seen as more supportive of the dollar.
Because his policies are generally perceived as more pro-business.
Right. A stronger dollar can help to keep inflation in check,
But it can also make U.S. exports more expensive.
which could hurt American companies that rely on international sales.
So again, there are pros and cons to consider.
It's a complex issue.
It seems like there's no easy answer when it comes to predicting how the election will impact the dollar.
There isn't. The outcome is far from certain.
But we can at least start thinking about the potential implications.
Exactly. And how those shifts might affect our investment strategies.
This is a lot to digest.
It is. There are a lot of variables to consider.
Is there any way to simplify all of this?
One of the most powerful tools for investors is diversification.
Spreading your risk across different asset classes?
Exactly. Stocks, bonds, real estate commodities, crypto.
And different geographic regions.
By diversifying your portfolio, you can mitigate the impact of any unexpected market swings.
It's like that old saying, don't put all your eggs in one basket.
Exactly. Diversification is about being prepared for a range of possible outcomes.
And in a world where political and economic uncertainty is the new normal.
Diversification is more important than ever.
Okay, I'm definitely taking that to heart. So we've covered a lot of ground today.
We have, from crypto regulation to the potential impact of the election on the dollar,
It's been a whirlwind.
but I hope it's been helpful.
It has. I feel like I have a much better understanding of how elections and the market are connected.
It's a complex relationship.
That it's worth exploring.
The more you understand the forces at play, the better equipped you'll be to make informed decisions.
Well said. So stay tuned for part 3.
Where we'll bring it all together.
We'll distill everything we've learned into key takeaways and actionable insights.
And we'll explore some thought-provoking questions about the future of the crypto industry.
And how the increasing politicization of finance might shape the market.
It's going to be fascinating.
So be sure to join us for the final chapter of our deep dive into the world of elections and the market.
See you there.
All right, welcome back. It's the final part of our deep dive into elections and the market.
I feel like we've uncovered so much.
It's been a wild ride, right?
Definitely.
Yeah.
But it's been fascinating to see how these two worlds are connected.
Politics and finance. You wouldn't think they'd be so intertwined.
You wouldn't, but they are.
Mm-hmm.
And I think understanding those connections is really empowering for investors.
It gives you that extra layer of insight.
Exactly. Let's take a moment to recap what we've learned.
Mm-hmm.
What are the big takeaways?
Okay, so first of all, we learned that elections do influence the market.
Right. But not always in the way we might expect.
Exactly. Remember that statistic from Citizens Bank about the S&P 500?
Yeah, how it's performed pretty much the same in election and non-election years.
It's amazing when you think about it. All that hype about elections causing market crashes.
It's not always the case.
And even when there are those short-term fluctuations around elections,
They tend to be short-lived.
the market always seems to find its footing.
It does. It's
Oh.
resilient.
So the big takeaway there is,
Don't panic.
right, stick to your long-term plan.
Don't let the election cycle throw you off course. What else did we learn? We talked about sector-specific impacts,
Right, how certain sectors might perform better under different political parties.
like defense and healthcare.
It made me realize that I need to pay more attention to the composition of my own portfolio.
It's a good reminder for all of us.
And it's not just about the presidential race either.
We can't forget about congressional elections,
Those can have a big impact too.
especially if there's gridlock in Congress.
Right. The market doesn't like uncertainty.
And then, of course, there's crypto.
Oh, yeah. The wild world of crypto.
It's a whole new landscape, and it's constantly evolving.
It's moving so fast, it's hard to keep up.
It is. But that's also what makes it so exciting.
So what's the key takeaway for crypto investors?
Knowledge is power. Do your research. Stay informed.
And be prepared for anything.
Because the rules of the game are constantly changing.
We also talked about the candidates themselves
Trump and Harris.
and their evolving stances on crypto.
It's important to look beyond the sound bites and really understand their proposed policies.
Right. What are their stances on stablecoin regulation, taxation of crypto gains?
Those are the details that matter.
And then there's emotional investing.
What are the biggest pitfalls for investors,
It's so easy to get caught up in the hype and make impulsive decisions.
especially during an election year?
So what's the antidote?
Stay disciplined. Stick to your plan,
Make decisions based on data and logic.
not on your emotions.
And if you're feeling overwhelmed,
Don't hesitate to reach out to a financial advisor.
they can help you stay grounded.
Exactly. So as we wrap up this deep dive,
What's the one big question you want our listeners to think about?
how will the increasing politicization of the crypto industry shape its future?
It's a good question. Crypto is becoming a powerful force in politics.
It is. And it's going to be interesting to see how that plays out in the years to come.
It's a whole new world out there.
It is. But I think we're ready for it.
I think so too.